Gold in fiat US dollars had its highest price close ever today. Yet those living in the Western world would hardly know this fact, given the rampant bubbles ongoing in respective competing asset classes. The US stock market rally thus far in 2024 owes more than half its gains to hot capital flooding into a few handfuls of overpriced tech stocks, mostly related to ongoing AI hype. Surely this is going to end well for those who stay too long at that punch bowl. Meanwhile, still nearly 75% of asset managers in the Western world have 0 to less than 1% allocations to gold-related at the moment. Apparently, no underlying risks will stop them from piling in late to the ongoing Bitcoin trade, now that high management fee unsecured ETFs are available. The US federal government continues to act as if it has the license to boost our phony GDP numbers by blowing out our debt by more than $1 trillion or so every 100 days. Now, I literally just updated this CNBC article's chart, which ballooned an additional $89 billion in the last day's update of the month of February from the US Treasury's Debt to the Penny website. Now, stop me if you're confused about the way this is all going to likely end. The actual sentiment in the current Western world gold market is in the trash. Unsecured gold and silver ETFs continue seeing net outflows of physical bullion, likely headed east to China, India, and Eastern Central Bank holdings. That has been the overall situation in both gold and silver Western world markets. Unsecured ETF and underlying COMEX bullion outflowing east, while both spot prices have climbed and consolidated sideways for eventual higher moves ahead. And later in this week's update, we're going to focus in on retail Chinese gold buying to start this year 2024. Now, of course, I've already shown you some record-breaking data weeks prior suggesting the bids on bullion in both China and India to start 2024 have been very strong, but you're going to want to stick around for the second half of our update for these moving images. Thus far, with next to no positive media attention in the West, the gold price has remained polite and strong, moving sideways now for over 3 years, finishing now 14 weeks in a row above the $2,000 an ounce support level, building a wider base for powerful moves ahead. I'm sure you've heard the boomer stories of lines wrapped around blocks of coin shops in the late 1979 and early 1980. Beginnings of that are already happening east. Of course, those billions of people are much more wealthy now, and they took next to no real part in the last major Western-driven bullion mania phase from the late 1970s. On this chart, the respective red dots here are merely measuring gold and silver's price appreciations thus far in the 21st century versus other commodity bull markets of the past. Now, I maintain the Pipsqueak 2011 peak was a mere warm-up for where this ongoing version ultimately is going to go. This coming bullion mania phase will likely combine both West and East fear and FOMO capital. And you can see just how ridiculous things got during the late 1970s Western-driven version here, and how long of a road ahead for both silver and gold respectively thus far in the 21st century if it's going to rhyme. Now, here are but a few things that will most certainly help along that way. Rampant fiat currency losses globally to bullion should create a positive feedback loop for more bullion buying as gains continue piling higher. Increasingly so, our very own current head of the U.S. Treasury is signaling to the world at large that will arbitrarily confiscate your savings in our exploding debt levels if we so choose to. Here she was at the G20 meeting this week.
Our coalition, representing more than half of the global economy, took action to immobilize $285 billion in Russian sovereign assets and jointly affirmed this money will remain frozen until Russia pays for the immense damage it's caused. My European colleagues have now taken an important first step to harness windfall proceeds from Russian sovereign actions. That's an action I fully endorse. I also believe it's necessary and urgent for our coalition to find a way to unlock the value of these immobilized assets to support Ukraine's continued resistance and long-term reconstruction. While we should act together and in a considered way, I believe there is a strong international law, economic, and moral case for moving forward. This would be a decisive response to Russia's unprecedented threat to global stability. And it would make clear that Russia cannot win by prolonging the war and would incentivize it to come to the table to negotiate a just peace with Ukraine.
Stop me here if you recall any country confiscating our sovereign savings and sanctioning members of our military industrial complex or billionaire classes, given our 21st century debacles in various countries in the Middle East. That's right, they didn't and they couldn't. Most of our purported sovereign reserves are in physical gold bullion holdings onshore. We also dominate the world's payment and debt plumbing, for now. But such abusive actions, like publicly threatening to confiscate Russia's $650 billion in U.S. treasuries, is only signaling further to the world, and especially emerging market nations on looking, that gold is a smarter long-term strategy. Buy your own debt, U.S. Treasury, Fiat Fed, and future coerced citizenry. We'll take the bullion instead. Judging by admitted record-high gold reserve buying over the last 2 years, mostly Eastern Central Bank buying, it's pretty obvious they got the message loud and clear, given their collective actions. Yet in late 2020, a BIS working paper on what percentage allocations into gold for government reserves suggested that most emerging market nations have a lot more gold to buy. The paper explicitly stated high allocations between 20 to 50% into gold for reserve managers who measure their returns in non-reserve currencies. Not coincidentally, CPM's group back-tested data from 1968 into 2020 also suggested similar for individual investors. Maintaining a prudent 20% gold allocation of one's liquid net worth over this full fiat currency era timeframe has also been the best allocation in terms of risk reward. Now, at the time of the late 2020 BIS paper suggesting that emerging markets hit the 20% gold allocation threshold, they were only about just over 1/3 of the way there. Now, up from 2020, following through the 2008 global financial crisis, the blue bars illustrate that emerging markets have been doing their best to add gold year after year. But it merely went to next level last few years, much thanks to the way the powers that be in the USA are embarrassingly behaving in public and with our fiscal situation.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates.
Subscribe to our channel here for weekly bullion market updates with exclusive bullion service offerings like this one.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA.
The spot gold price surged to close this week's trading just below $2,100 an ounce. The spot silver price followed with a slight pop to end the week just above $23 an ounce. The spot gold silver ratio still finished laughably high, just below 90 on the week. This all said, in a bullion bull you want to see gold lead, so let's see if gold can continue its strength next week. Turning to the ongoing stealth U.S. banking crisis underlying, shares in New York Community Bank plunged today after ineffective oversight and risk assessments were admitted by the bank, which last year swallowed up the failed Signature Bank. The bank's stock is now at 1997 low levels, and reports are they have delayed submission of their past due annual report. Meanwhile, on the other side of the Western world, the Bank of England, the bank that keeps the real money in the basement, is hosting a Future of Money exhibition where they highlight their hopeful future world of oncoming CBDCs or fiat central bank digital currency. Their upcoming CBDC future is reported to be decided next year in 2025, whereas the European Union has front-run and is already moving ahead with members of the European Parliament passing digital wallet regulations, only now awaiting EU Council of Ministers to become law. Congrats, Europe. You can now do it faster digitally. For our final segment of this week's SD Bullion Market Update, we turn to China, where it's mostly young citizens, which are increasingly turning to gold over their floundering fiat yuan, local real estate market, and garbage stock market performance. For example, take a look at the Chinese Shanghai Composite from 2007 until now in 2024. Basically dead money when compared to gold, and that is without considering ongoing fiat yuan devaluations versus goods and services over the last more than 16 years. Now, it's no wonder premiums on gold remain high there, as record volumes of gold deliveries jive with high gold sales to start this year in chart after chart. But moving pictures are worth more than perhaps 1,000 charts, so let's hear and see a snippet from an 18-minute China Observer clip with full backlink in the show notes below if you want to see the entire clip. We're probably going to end up watching about half of it. But here you're going to see why this 21st century bullion bull market is making the 1970s version a laughingstock in both volume and size. Escalating valuations being the final end game for this gold, the final bubble era. Have a look.
The scene was shocking. On February 14th, the 5th day of the Lunar New Year, when the Pangdong Lai department store in Xuchang, Henan, opened for business for the first time that year, 800,000 people flooded into the mall. Tourists from other places had surrounded the mall 4 hours in advance, leading Pangdong Lai to open its doors 20 minutes early for the first time to welcome guests. Customers frantically purchased gold, and jewelry at the gold counter sold out. The crowd at the scene was comparable to the Lunar New Year holiday travel rush, with Chairman Yu Donglai himself maintaining order. On February 15th, the 6th day of the Lunar New Year, when the doors opened for the second day, Pangdong Lai continued to be packed to capacity. The gold counter was once again sold out. As a well-known local retail brand, Pangdong Lai has always won the trust of customers with its high-quality service and good reputation. Selling gold on such a highly reputed platform undoubtedly increased the attractiveness and credibility of the goods. Due to the excessive number of people, on February 15th, Pangdong Lai Mall had to make the following announcement. Hello, ladies and gentlemen, dear guests. Due to the large number of customers in the mall, entry is being limited. You may need to wait in line for up to 3 hours. All parking lots around Pangdong Lai were opened for free, with a large police force dispatched for traffic control, right up to the intersections. Looking around, it was packed with so many license plates, scaring the locals to the point where they dared not leave their homes.
I heard that on the first business day after the Chinese New Year, Pangdong Lai's gold counter was sold out, and I didn't believe it until I saw it for myself. Now I've managed to squeeze in, and about half the crowd has already left. I'm surrounded by people on all sides, and I finally made it to the entrance with the sea of people still behind me. Look, this is Donglai Pure Gold, and here is Donglai Jewelry, with a very high number of customers purchasing gold.
Ms. Hao posted a video on TikTok saying that there were especially many people at the Pangdong Lai gold counter, and all the gold had already been sold out. The gold sold incredibly well, beyond expectations. On February 16th, coming to Changle in Shandong to buy gold. Today, I also experienced the scene of people crowding and rushing to buy gold, just like rushing to buy vegetables at the market. The processing fees at each shop are different, but overall, the price difference is only a few yuan. It was so crowded that I could hardly breathe, and I didn't care about the styles anymore. I finished buying as night fell. Finally, I'll show you today's haul. 2 necklaces, a bracelet, a ring, and a pair of earrings, totaling 63 grams. In recent years, China's economy has encountered numerous challenges, including persistent downturns in the real estate sector, increasing risks associated with local government debt, pressures from deflation, significant withdrawal of foreign investments, rising unemployment among the youth, sluggish economic growth, and a persistent decline in the stock market. These issues have resulted in substantial losses for investors, causing widespread concern and disappointment. The South China Morning Post reported on February 17th that the housing and stock markets, previously common ways for Chinese people to accumulate wealth, are no longer safe. This has made low-risk instruments, including fixed deposits, comprehensive life insurance, and gold, popular means of wealth preservation. Professor Wu Fei of the Shanghai Advanced Institute of Finance said, "People realize that the winter has come. They have become more conservative and more crisis-aware, especially regarding the stock and housing markets." Chinese consumers have also felt the chill of the significant economic downturn, buying and hoarding gold in large quantities to avoid the financial crisis. Zhejiang's Qianjiang Evening News reported that last month, an investor bought 3 kilograms of gold bars at the Hangzhou branch of China Construction Bank all at once. Evelyn Xu said, "Gold has been very popular over the past year, mainly purchased as a safe haven asset. Despite the soaring prices, we expect sales to reach a new high in 2024. During the Chinese New Year period, gold markets across the country experienced a gold rush. In Shenzhen, China's largest gold and jewelry trading hub, the Shuibei Market's gold showroom was surrounded by customers. The market was bustling, and although the merchants had just opened for business, sales exploded. A regional manager of a gold merchant in Shuibei said that in 4 days, their total shipment volume was about 400 kilograms, an increase of about 30% compared to previous years. Mr. Zhou, a gold jewelry wholesaler from Shantou, Guangdong, came to Shuibei to restock after experiencing good sales in his store during the Chinese New Year holidays, preparing for the upcoming Lantern Festival. A gold shop in Shanghai during the Chinese New Year period could sell more than 1,000 gold bars a day on average. The queue to buy gold was so long it was out of sight, with some customers spending over 200,000 yuan in one go. A customer who shopped at a Shanghai gold store said, "It's like buying vegetables. Every store has a queue, and there's no service experience to speak of." Not only in first-tier cities like Beijing, Shanghai, and Shenzhen, but demand for gold jewelry and investment has also significantly increased across all provinces and cities in the country. In a gold wholesale market in Jinan, Shandong, there has been a surge of people recently. Sales staff revealed that gold bracelets have become a favorite among many young people. Previously, the most gold sold in a day was about 20 kilograms. But recently, up to 50 kilograms of gold can be sold in a single day, which is an astonishing volume of sales. A gold shop in Qingdao, Shandong, was facing an unprecedented demand, with all gold bars sold out. Gold jewelry professionals indicated that this year's sales increased by more than 25% compared to last year, with consumers mainly purchasing bracelets and pendants with dragon accessories. Young people in their 20s and 30s have become significant drivers of gold sales. Gold prices are now very high, unprecedentedly so in the past few decades. The price for gold jewelry is 630 yuan per gram, excluding the craftsmanship fee, and 480 yuan per gram for gold bullion, which would have been unimaginable a few years ago. According to data released by the China Gold Association in late January, China's gold consumption in 2023 reached 1,090 tons, up nearly 9% year-on-year. Among this, over 700 tons were gold jewelry, marking an approximate 8% increase, and nearly 300 tons were gold bars and coins, up about 16%. A 2023 Jewelry Industry Trend white paper released by Tmall shows that the main consumers of gold jewelry are women aged 18 to 34, with a particularly noticeable enthusiasm among those born after 2000. Moreover, according to the 2022 China Gold Jewelry Consumption Industry Insight Report, the proportion of young people buying gold surged from 16% in 2016 to 59% in 2021, making them the top consumers of gold jewelry across all age groups. Unlike the past trend of older Chinese women buying gold in bulk, young people mainly purchase two types of gold, jewelry and gold coins or gold bars, each serving different purposes and being priced differently. A 25-year-old from Anhui and a self-proclaimed novelist with pseudonym Zhao Mingyu has a background in finance and a keen business sense. He started investing in the stock market in high school and currently works as a financial advisor. A few years ago, he shifted his focus to gold investment. In an interview with foreign media on February 16th, Zhao stated that the stock market's worms, or corruption, made it impossible to profit, leading him to sell his stocks when the index was at 3,000 points. fortunately avoiding the major market crash. Seeing China's unstable situation and economic downturn, he chose gold to hedge against inflation. He considered it wise to invest half of his assets in gold bars. Allocating about 50% of my balance seems prudent, considering the next 5 to 10 years may not be stable, and gold could potentially save your life. He revealed owning 8 100-gram gold bars, 8 500-gram gold bars, 2 1,000-gram gold bars, and several 50-gram gold bars, all appreciating. Investing in gold gives him peace of mind, as its price follows international trends, making it a universally accepted currency. Professor Xie Tian, a professor in business at the University of South Carolina, Aiken, said that Chinese people buying gold is partly due to concerns over the economic future. They worry about the devaluation of the yuan due to the bursting of the real estate bubble and the stock market crash. Traditionally, gold is regarded as an asset that maintains its value, offers protection against inflation, and serves as a safe investment during uncertain times. This is captured in the adage, collect antiques when times are good, turn to gold when times are uncertain.
Stare at any major reserve fiat currency chart versus gold this 21st century and it becomes clear that gold is poised for a breakout. And while the East is obviously increasingly awake to this fact, the Western world is majority still asleep at the wheel, thus signaling this burgeoning bullion bull market has a long road higher and wider to come. That will be all for this weekly SD Bullion Market Update. As always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.